Today, investors have their attention fixed on today's 150 billion naira T-bills auction, keeping the market calm. Meanwhile, traders at UBA say improved demand is observed on the March 2027 bond. And Kenneth Onuoha, team member, Assets and Liabilities at UBA, joins me now for more market movements. Kenneth, thank you so much for joining us on the show today. Now, it's been quite an interesting week. We have the bulk, the larger part of this week being the holiday, so it's welcome back. What are the market movements here, especially outcomes here for today's primary market auction?
All right, thank you so much, David, and good to have you back again. Like you did point out, yes, the trading week has been interrupted by 3 days of holiday owing to the Eid celebrations, and yes, but the last trading day was on Monday, and like you had pointed out or stated clearly, today is the NTB auction, which was originally meant to hold sometime in the week, yes, on Wednesday this week. Very quickly, 149.6 billion is up on offer across the three standard buckets of the 91, 182 days and 364 days respectively. What we hope to see in the auction today is another oversubscription because, of course, it's showing investors' appetite in our current fixed income market. We do expect that stop rates will trend or print around the same levels. Remember that in the guidance that was given to us by the CBN Governor, Mr. Olayemi Cardoso, he had earlier mentioned the fact that stop rates will print around the MPR. So we expect that in keeping with the previous auction results that we have seen, we expect that this will be oversubscribed and the rates will print somewhere around the 21% levels that we have seen in the past couple of days. On the secondary market side, indeed, we have not seen much activity. The market has been calm. Of course, investors are patiently waiting to see what happens at the primary market auction later today. We, however, have seen interest, of course, in the April 1 maturity, which was the OMO bill. It's trading currently around the 20.5% levels. We've also seen sustained interest as well in the 6th February and 6th March maturities, respectively, which have traded around 18.5% levels, respectively, 18.5 and 18.9% levels, respectively. That pretty much has been the lineup of activity on the Treasury bills market. On the bond side, however, we have also seen that there's been very calm, but yes, bullish tilt in that market, in the secondary market side. What have we seen there? Where the general investor body language speaks to everyone being calm, waiting to see, because of course the NTB has taken center stage today, but primarily the interest has been, I've seen demands lean towards the 2027, and the reasons are not exactly far-fetched. 2027 maturities, we've seen investors lean towards that direction. We've also seen demands in the 2034s as well. The 2053s have shown, we've seen offers there, but there have been very little bids to match in the 2053s. We do know that on Monday we have the bond auction on Monday next week, where 450 billion will be put up on offer across three maturities. The newly introduced or newly issued 5-year maturity is 2029, and of course the reopening of the 7-year and the 10 years respectively. We expect to see the market to be the auction activity there to be very, very highly subscribed, because we've seen where the rates are currently printing at, and of course that is enough to attract foreign portfolio investments into the country. So pretty much that's what's happened on the fixed income market. On the money market side, however, we have seen that system liquidity shrunk at the beginning of the week for 48.40 billion in deficit, large from the over 500 billion that we saw as at close of business on Friday. This was largely due to majorly swap rollovers across some unspecified number of banks. What we also did see in the money market side is the fact that this, of course, caused an uptrend in of OBB and overnight rates by over 300 basis points to close at 25.97 and 26.31% respectively. As at the start of business today, we saw that the system liquidity has increased about 60 billion levels. But what we do know there is the fact that pending the settlement of the NTB auction, upon settlement of the NTB auction today, we will see that, of course, these levels will drop and the system will be in repo. And then, of course, that will cause the rates to, of course, go up again significantly. So that's pretty much what has happened because of the week.
Well, you've also highlighted just a little bit about what to expect next week as well. Looking at the auction, we also have our eyes fixed on inflation numbers. Analysts are saying, well, we're going to see that print above 32% as well. Now, within the realm of also looking at rates being elevated and also providing real returns for investors. How do you see things moving forward?
Of course, you were right. Inflation is currently at the levels where they are currently trending, and the real return on investment is not exactly where we expect it to be. But where do we see it going? The Naira, across the board, everything seems to be showing an uptick. The rates are going up in terms of the yields on our fixed income securities. The Naira is strengthening against the greenback significantly as well. So everything seems to be looking up and up. And remember that the promise of the CBN governor was to rein in on inflation to 21.4% by the end of the year. We expect to see some moderation in inflation levels by middle of the year and towards the end of Q2, and then that would naturally take us to the end of the year.
And also still looking at conversations around how much debt our market also has now. We also heard of the reports from the finance minister as well, highlighting that about 4.8 trillion naira out of the 7.7 which was recorded from the T-bills and OMO auction by the CBN in the first quarter of the year was used to begin the process of settling the ways and means. We'll definitely keep tabs on all of this developments and much more. Kenneth, thank you so much for your time on the show today. We'll definitely catch up much more later. That was Kenneth Onuoha from UBA.